Welcome to BDI's webinar today. While people are trickling in, I just want to introduce myself. I'm Katrina, the Senior Marketing Manager at BDI, and I'm joined today by an incredible panel of BDI's leaders who are going to share our benchmark study and what's coming in the future of fundraising. While we're waiting for people to join, I ask that everyone look at the chat bar on the right-hand side of your screen. Please introduce yourself in the chat. There are a lot of BDI clients in here, but there are also people from across the industry joining today. And it's great to just introduce yourself, get to know one another, meet one another. Please share your name, what organization you're joining from, and where you're from. And we can just chat with each other while people are coming into the room. At the end of this presentation, we will have time for Q&A. So if you have questions throughout the webinar, go ahead and enter your questions into the chat. We'll collect all those questions and then we'll address all of them at the end, but you can enter them in at any time throughout the presentation. We'll also send everybody a link to this recording after the fact, and our official full benchmark comes out next week. So if you're part of this webinar, you'll receive our email with that full benchmark. So that will be sent to you, not today, but next week, but you'll get the recording today. Okay, so I think we can get started. I'll hand it off to Brian.
Hi, everyone. How are you? My name is Brian Tucker. I am the Vice President of Client Strategy, and I service BDI's rescue mission accounts.
Hi, my name is Mindy Sherfy, and I'm also Vice President of Client Strategy, and I get to work with our custom rescue missions and our national clients.
Hi there, I'm Stephanie Tippitt, the Senior Vice President of Digital Strategy, leading the digital marketing program at BDI.
And I'm Angella Hubbert. I'm the VP of Data Services, and I manage the team of data specialists, engineers, and analysts. And I will start this off. We are going to be sharing information about across 48 nonprofit organizations in the same vertical, representing geographical diversity throughout the U.S. And that objective of the study is to provide insight into current trends of donor health and financial sourcing for rescue missions throughout the U.S. We also wanted to know what is working in fundraising for BDI client partners and find areas for improvement. This study encompasses 10 years of data. It is also based on exclusions for gift in kind, so we will remove any gift in kind donations. We will also, where identifiable, remove anonymous and organizational gifts. It's an annual study that is complete donor files and tracks macro trends and monitors overall donor file health. And lastly, one of the important things to note, you see 14.4 million gifts and 2 million in total revenues represented. But what we do wanted to stress to you is there's 1.18 billion revenue of that 2 billion that is reported in calendar year 19 through 23. So that's a huge spike. Let's go into some of the details. Our first key takeaways to Brian Tucker.
Yeah, all right. I'll start us off. So the first key takeaway is that we have seen an 11% increase year over year in individual giving by major donors. And we're defining a major donor in this case as someone with a single gift of $10,000 plus. And when we dig into the details here on this chart, what you're going to see is that that sort of tan bar represents gifts under $10,000, and the blue bar above represents gifts above 10,000. So as you can see, we're starting to see a slow decline in just overall giving, but this increase in major gifts by about 11% year over year is softening the drop in gifts under $10,000, which we've seen a 3.8% decrease year over year. So the key takeaway here is that the majority of the BDI clients have seen growth coming from donors who are giving 10,000 plus. And this is why messaging to this segment really matters. All of the data and all the trends are saying that your major and some of your mid-level segments are going to warrant the most investment over the next 5 years. The second key takeaway is talking about new and reactivated donors. So new donors are down 7.6% year over year. Unfortunately, it's not a surprise that we've seen a decline in direct mail acquisition, but most nonprofits are seeing about a 20% drop year over year. But there is some good news. We are seeing that reactivated donors are up 10.2% year over year. And when we look at the details, one of the things we're finding is that inflation was likely a factor in a drop in new donor acquisition. It's at a 40-year high right now at about 8%. And then we've also had some unrest break out in the Middle East right during this key acquisition season. And the coasts are being hit a little harder as well. We service 57 rescue missions from coast to coast. We are starting to see East and West acquisitions harder, than it is in Middle America. But when you look at reactivated donors, we're starting to see things normalize. So there was unprecedented unprecedented reactivation rates during COVID. And then that led to a bit of a drop in reactivated donors as the well was dry. Well, now that well is starting to fill back up and we're starting to see those results return to normal. So key takeaway, BDI clients have seen fewer new donors across the board, but we are seeing an increase in reactivated donors. Mindy, would you like to take us through the donor lifecycle trends?
Yeah, let's start. All right. Looking at this graph here, if you look on the left side of it, the dark blue color, that's showing the percent of donors from that specific life cycle. The right in the sort of teal color is showing what percent of revenue is coming from that life cycle. So everybody will see the big bar in the middle that sort of jumps out at you. Those are your multi-year donors. And as just a quick reminder, multi-year being a donor who gave in 2022 and gave in 2023. This group makes up 54% of the total number of donors and 74% of the overall revenue. So a super important group of donors. In comparison, for example, the second year from new is representing 6% of the total number of donors and only 5% of the revenue. So as you look at this, you might be asking yourself, what percent is accurate, or what percent are we shooting for? What are the ideal percentages for a healthy file? So let's dig into that. So as a quick reminder, let's think about a donor life cycle. When a donor comes on, they're going to come on as a new donor. The next year, they're going to be second year from new. If they make a gift, then they become part of that critical multi-year tier. And as we saw on the last slide, that group represents 74% of revenue. So we have to constantly be filling the funnel or the bucket that is leading people into that multi-year group. So data suggests in the little red boxes that you'll see on this slide, that represents sort of the optimal percentages. So for a healthy file, about 50 to 70% is coming from your multi-year donors, and about 10 to 20% is coming from your new donors. But as Brian mentioned, with a soft acquisition last fall, we see that new donors are sitting well below the optimal range right now. And when that number is below 10%, organizations could down the line struggle to maintain file counts. And then, of course, that means revenue. So what's our takeaway from this? Investing in new donor acquisition, this is not anything new to anyone on this webinar, I'm sure. We have to continue to invest both offline and online so that we can, again, continue to fill the pipeline that leads to multi-year donors. So let's hop into our next takeaway, which is a little bit more encouraging news, and that is that retention rate for our benchmark increased 2%. And in comparison, just a week or so ago, the Fundraising Effectiveness Project report came out, and they reported overall a drop of retention of about 2.5%. So with BDI's rescue mission partners in the benchmark, we saw the 2% increase. And as you look at the individual donor groups, multi-year, second year from new, and second year from inactive lapsed, you'll see that each group had a slight increase, which led to an overall retention of 62%. So let's talk a little bit about what data points are going to drive retention. First, and probably not surprising, donor value. So as we look at this graph, it's showing us the retention rate for various donor values. If you jump down about halfway through the graph, you'll see the $100 level, and that group and above, they have retention rates 74% or higher. And if you look down, there's some giving levels in those higher groups that have retention rates as high as 85%. So certainly your higher value donors are super critical to retention. The second piece is sustainers. And Stephanie will share a little bit more about that later. But sustainers are super valuable in terms of retention. Nonprofits with established sustainer programs have an annual cancellation rate of just maybe 5% compared to 25% of turnover overrides, or even more, 35%. So the more sustainers your organization has is going to drive up your overall retention. So I think the question is, we saw retention rate go up as a donor's cumulative value went up, but does that hold true for new donors? So this chart that we're looking at here shows new donor reactivate retention or conversion, getting that second gift based on the first gift amount. And you'll see at the various first gift amounts, there's really not a lot of change. So a donor with a first gift amount of $250 had a 36.4% conversion or retention rate. And donors in the 25 to 49 category, they were at around 35%. So 36% compared to 34%. So not a lot of difference in retention based on first gift amount. So let's see what our takeaway is on that. And as you can imagine, we could do a whole webinar on nothing but retention. But a couple of things we want to take away from this is knowing that lifetime value goes up with your first gift. What strategies could we put in place to boost the reactivate or the conversion or retention rate of those higher value segments so that graph wasn't so straight up and down where all of them were about the same percentage? How do we move the needle on the higher mass and mid-level donors? And the second piece is how to drive. We should all be focusing on driving those lower level donors to a sustainer program. So Stephanie, talk us through some online metrics.
All right. Thank you, Mindy. Well, as you can see, online giving for our client mix increased by 5% year over year. Now, this is an encouraging number and not the case across all nonprofits. The recent M&R benchmark shows a slight decrease of 1% in online giving in 2023. And it's also positive to see the COVID lift that occurred in 2020 is holding steady, both from reactivated donors, like Mindy's mentioned, and from new donors and a strong percentage of retained donors. In the next slide, we will see more promising data around online giving. Over 20% of new donors were acquired online, and we expect to see this number grow. We encourage our partners to increase their digital presence with strategies in multiple digital channels. This can be a progressive growth plan, building upon learning success year over year. So we don't expect to see organizations go from 50,000 in year one, and you hear this presentation and say, we have to bump to 200 next year. No, but have a plan to get there. Another area that needs attention and investment is in tracking and measurement of both direct and attribution revenue. One piece of good news is that Google has just delayed the deprecation of cookies into next year. So now we all have a little more time to fine-tune our tracking strategies. The key takeaway for BDI clients, online channels show growth in revenue and in acquiring new donors. Next, we're going to look at sustainer giving in the digital channels. Monthly donors are a strong source of year-over-year revenue, as we all know, and specifically demonstrated in our report. If we look at this next slide, you will see a consistent growth curve over the last 3 years. Ever since 2019, we have seen this steady growth in sustainer giving, especially for clients that are active in digital marketing. At BDI, we have a dedicated focus on promoting monthly giving in all digital strategies in email, web, text, and paid media. And another way we've helped grow our partners' monthly donor segment is through their donation platforms. Several platforms offer monthly giving nudges during the checkout process. We have seen as much as 30% of new donors coming from this type of form feature. Be sure to check out if your platform offers it and test it. And last, for participants in our digital program, recurring revenue makes up 25% of their online income. Now, this stat varies by organization, and we have seen this number increase year over year, especially for the clients that have built integrated online and offline strategies and consistently include the monthly donor offer throughout their campaign calendar. Our key takeaway: for BDI clients, investing in a sustainer program provides not only consistent revenue, but also contributes to strong retention rates. And next, since we've shared positive digital results today, we also wanted to offer a few strategies we use to help grow our partners' online revenue. So first up is Text to Give. Text to Give is a strong complement to your digital cultivation strategies. Over Giving Tuesday this past fall, one client received a $10,000 gift over text. Wow, right? This is also a great tool for thanking your donors and sending non-ask touches throughout the year. Another important strategy is to use paid media to build awareness and drive donations. The right mix of paid media channels, messages, and audiences can build awareness and acquire new donors. We are seeing success with audience segmentation, platform machine learning, dynamic art and copy, and growing your media presence to being always on in core channels like search, Facebook, and display. And incorporate a test and learn cadence always. Next, you want to invest in email acquisition campaigns in all channels. Email acquisition will help build your first-party data, which is necessary for cultivation and for prospecting in paid media channels. First-party data will be a key tactic when cookies are finally gone, possibly next year, we'll see. We've had success with email acquisition strategies on websites, on Facebook, and in search. There are also e-appends to your donor files and co-op email acquisition lists that can be used to grow your email lists. And last, don't forget this important tactic, and this is my favorite. Optimize your donation page to grow your online revenue. Donation page optimization is key to the success and growth of your digital program. Do you know your donation page conversion rate? How does it rank against industry benchmarks? I've seen benchmark stats anywhere from 12%, which is from the recent M&R report, to 17%. When we combine the main donation page with campaign pages, the average for BDI clients sits around 17%. But the main donation page, the one that's usually up in the upper right corner of a site, that can be as high as 35 to 40%. So a planned out CRO plan, which is a conversion rate optimization, can help uncover where there's friction on your forms that could be reducing the conversion rate. If you invest in your digital program, you must make sure your website and your donation page are doing their job and converting that website traffic into donations. The key takeaway: the right mix of online giving channels and strategies is essential to build awareness and acquire new donors for your organization. So thank you for your time today, and I'm handing it back to Angela.
Great. Thank you, Stephanie. So you've heard a lot of information today, but what we've done is we've honed in on 6 top key takeaways from this presentation. First, giving by major donors has steadily increased. New donor acquisition has been on the decline. Donor retention is a strength for BDI clients. Online channels show growth in revenue and in acquiring new donors. Sustainer programs are an important source of stable income. And lastly, online giving has steadily increased from calendar year 14 to 24. Thank you.
Great. Thank you, Angela, and thank you, team. That was a lot of information packed into 20 minutes. So I'm sure everybody has questions. If you have questions, please enter them in the chat and we'll go into Q&A for the rest of our time together. I wanted to kick it off with a question for Stephanie. I know you mentioned Google delaying their removal of cookies. Could you talk a little bit more about that? Because that is hot news that came out, I think, earlier this week.
Right. Just a few days ago. It is hot news. And we have been kind of wondering, because this isn't the first time they've delayed. They keep threatening, but I think that that's going to hurt them as much as anybody else is partially, my guess. But it is an important thing. Even though they've delayed it, it really shouldn't stop the train, so to speak, in developing what we're going to do when it goes away. And so there are some strategies in place that we can be thinking of. And there's server-side tracking. There are better use of GA4, looking at conversion funnels. There's several different things I'm sure that a lot of organizations are considering. So it does, again, give us a little buffer of time, but we still have to keep moving forward to figure out a solution.
Great. Okay, this question came in beforehand. It's maybe for Mindy if you want to take it, but anyone can jump in. You talked about investing in sustainer programs. Can you give some advice of how somebody can do that? What are some tips to invest in sustainer?
Yeah, there's some really simple things that I think people can do without a lot of budget. And some are what Stephanie mentioned, making sure your monthly donation page is optimized, that you are testing potentially monthly opt-in light boxes, inviting people once they've made a gift to make that gift monthly. The other piece that I think is super important is don't be afraid to take your lower end donors, whether it be a first gift lower end donor, and invite them to give a smaller monthly gift. Because if you think about, just $10 a month, we all know turns into $120 that you can absolutely count on, when that donor might have only given you $10 or $15 initially. But pushing a sustainer right out of the box through email welcome series, through inserts in your thank you letters, I would encourage people to look at every piece of communication they're putting out, whether it's an email, whether it's a letter, and how can they incorporate a sustainer ask into that communication.
And I would add, just don't be afraid of the ask. Communicate how valuable it is and how it impacts the program that you're offering and how you're serving people. The other really quick thing that we've done is the donation button that I reference. It's up in that top right corner, and make it a drop down that is a donate now and a donate monthly. So there are just simple little changes that you can make on the website, and you can measure the results of that to see if it's moving the needle forward.
Great, thank you. We had a question come in just a couple seconds ago. What strategies or approaches are you using to profile donors to know characteristics of the different donor strata?
I can take that. And Dana, if I'm not answering your question, please let me know. But generally, we do work with our clients to do different types of data appends, whether that might be age, income level, different types of third-party data. And then we are also moving more towards data modeling strategies that are, essentially using third-party data to select the best donors. I will tell you too, one of the key challenges here is that as an agency, we can append these things, but really the client has to own them. So a client CRM has to be set up to actually capture that information so that we can act on it. There's just a lot of things going on in donor privacy right now where, we can help you get that information, but at the end of the day, you're the one that has to catch it and retain it.
Thanks, Brian. And Dana, if we didn't answer your question or if you have any follow-ups, let us know and we can circle back to it. Another question came in from Brian. Facebook made some changes to online giving late last year, and we're seeing a drop in online giving. Is that new news?
No, not new news. I think part of what we're seeing is actually visibility. So we wouldn't necessarily say that there's a direct drop in revenue that's coming in from the use of Facebook, especially if it's part of your multi-channel approach. But we definitely have lost some visibility in that conversion revenue, and we're losing the ability to the lookalike audiences have decreased. If you've seen that, that's impacting things. So one of the ways that we're combating that is what Brian actually mentioned, modeled lists. So using custom audiences and bringing in more modeled lists to offset the loss in some of those lookalike audiences that we're seeing. And then also the other way to look at that is by measuring the impact. If you do have months where you're down in Facebook, are you able to track and see, is there also a slight decrease in your revenue? And is there an increase in your revenue when Facebook is turned back on? So it's not a simple answer, I recognize, and it is really complicated. But those are some of the things that we're seeing.
Yeah, and one other thing I just wanted to add to coming back to major giving, donor advised funds are starting to make this a much more complex puzzle. So one thing that I would encourage organizations to do is, if there is a way, make sure that you can, whenever possible, attribute a donor advised fund gift to the donor. One recent thing that we saw was we had a client who, because they were not attributing gifts, they had major donors who actually looked lapsed, but it's just because they shifted their giving to donor advised funds. So, and this is something, we've been experimenting with different ways to market to help encourage donor advised fund gifts. But again, it just poses yet another attribution problem.
Yeah, great. Thanks for jumping in on that. We got a question from Vicky about our stats on the percent of revenue that comes from non-cash gifts like stocks, donor advised funds, QCDs, especially from major donors. Does somebody want to take that question and kind of talk through those stats again?
Yeah, I can take that. This is actually not a stat that we looked at in the benchmark. We break out our major donor giving and we break out giving from capital campaigns, but it's a great thing for us to consider when we do the next benchmark, is considering breaking out whether it be donor advised funds or required distributions, those non-cash or smart giving channels. But we haven't looked at that in our current benchmark.
Yeah, and Vicky, I'd say too, part of the challenge is out of those 57 clients, there's 57 ways that those donor advised fund gifts or stock gifts are attributed. So we can't report on a benchmark. Usually we can dig in on a client individually, but it's too messy it could be a misleading number. Let's put it that way.
Okay, great. Any other questions for our team while we have them here? And if you don't ask a question today and you get off the phone and you think I should have asked them that, you're always welcome to email us. We'll get back to you and answer any questions you have. Our full benchmark comes out next week, and all of you will receive that over email. You'll also receive a recording today. But here are a couple more resources. Our benchmark comes out next week, as I mentioned. We also just had our CEO write a SWOT analysis that looks at really high-level trends that are happening in philanthropy. in North America, but also around the world. And it's a really, really strong piece. If any of you are interested in that, we have it linked. You'll be able to check that out today as we send out the recording. And then our CEO also wrote a piece about the decline of tithe in individual giving. And if you are plugged into that happening at your organization, then that's definitely something to read. Let's see, we have a couple more questions here. If you guys are good to stay on. Is the designation of a major donor at $10,000 typical across the country?
Yeah, sorry, and I just commented back to Mary. It's like it's typical with rescue missions, but it can vary by verticals. Like to give an example, healthcare, a major donor is probably someone who's giving $100,000 or more. Where it's getting a little bit trickier is in mid-level, defining that group in between, from 10,000 under. It's something that I would say we're still working to define, and it's something that is more organization related. Bigger organizations might consider a middle donor someone with a $2,500 one-time gift, while other organizations might be as low as $500.
Great. Thank you for responding to that, Brian. And then Vicki also asked, you mentioned you excluded estate gifts from the study. Do you plan to do any research on planned giving? It's a big opportunity for donors and organizations.
All I can say now is it's in the works. Stay tuned.
Great. Okay, well, anything else that this panel wants to add before we sign off today?
I just want to say thank you, everyone who joined. Thank you for the time. I know it's really, your time is precious. So thank you for giving it a little bit to us.
Yes.
Thank you, everyone.
Thank
Okay.
you.
Thank you.
Thanks, everybody. Bye.
Bye.